Bank of Nova Scotia has kicked off earnings season this morning. Scotia reported a 29% gain in adjusted profit in its fourth quarter to $2.1 billion. Scotia has also set aside $1.03 billion in provisions for credit losses. For insight, let's welcome Rob Wessel. He's managing partner at Hamilton ETFs and a former Bay Street bank analyst. So we always enjoy his insight on day one of bank earnings season. So thank you for coming in.
No, thanks for having me.
Early this morning to join us.
My pleasure.
What do you see in these Scotia numbers?
I don't think there was anything terribly illuminating. It's Q4, so remember, every Q4 for the Canadian banks always has the potential for some cleanup items and some messy things. Here, there was just two one-time items, but be that as it may, I don't think there was anything that kind of moved the needle for Bank of Nova Scotia. So going from memory, if I remember correctly, revenues were down a bit, taxes were higher, but they were offset by lower provisions and somewhat better expenses relative to the street. That's a bit of a wash. So, the stock has had a good run in the last 3 to 6 months. It's outperformed. So I don't know that you're going to see any large moves from today.
We'll show viewers a snapshot of the result. Here come the earnings per share. It's a very modest miss on earnings per share, $1.57 versus $1.60 expected. Those are adjusted earnings per share. Here are some high-level highlights from the results. Annual profit on an adjusted basis, and there's a fairly big difference this time around between adjusted and reported profit. Annual adjusted profit comes in at $8.6 billion. That was up 3%. Provisions for credit losses, a closely watched number, comes in at $1.03 billion. Canadian banking adjusted profit there soars by 35%, and international banking adjusted profit rises by 15%. We're seeing some very big numbers in adjusted profit increases here. Why so?
Well, so I'm not a big fan of the segmented results for any of the Canadian banks. There's without to get too technical, they all have their different segments, and then they have this big thing called corporate support. And for example, Bank of Nova Scotia, that was negative $500 million. So there's a lot of transfer pricing that goes on. So we find it, I think, caveat emptor if you're looking for the segmented results.
Okay.
But in terms of, you've seen some moves in credit, you've seen some moves in capital markets. For Scotia, loans were down a bit, margins were flat. This was not a nothing quarter, but there was nothing interesting in this quarter.
We're going to talk about the group as a whole in our next conversation. What do you think of Scotia's provisions for credit losses number, or what did you see in terms of credit quality here?
Well, there was actually, so gross impaired loans were up, provisions were up modestly, but what's interesting is that they actually released performing allowances. Again, without getting too boring or technical, the Canadian banks measure loan losses against loans that are impaired, i.e. they're bad. Yeah. And then they have this theoretical or sort of estimate for loans, what they might lose for loans that are still current. This buildup of this allowance, which is quite large, has been a major headwind for Canadian bank profitability. And this is the first time we've seen in a long time a bank released reserves against this giant allowance. So if that's a trend that is adopted by the other banks, or we see that actually is a reasonable positive.
Interesting. Did these results get a push, a so-called tailwind from credit?
A little bit, a little bit.
How well has the bank articulated its new strategy under the new leadership?
As good as they can. It's a bit, they're in a tough spot. So, Bank of Nova Scotia's ROE on an adjusted basis is not even 11%. So that's well below the average of like 13.5 for the group, which, by the way, is also fairly low. Based on historical standards. So I think they've done a good job, but they have a lot of work. These are big companies, they're like super tankers. It takes an awful lot to move the needle. So the new CEO has his work cut out for him. He's going to take him 4 to 5 years to really see the impact of the changes they're making today. And obviously KeyCorp, this capital allocation, which takes place next year, and the equity pickup from that is still somewhat of an unknown. Right.
That's the acquisition of a bank headquartered in Cleveland, and it's it's not an acquisition of a bank.
That's right.
It's an acquisition of a fairly small minority piece. I think it's in the range of 15% of that bank. And do you regard that as a head scratcher?
So first, I think they're going to do like a third of the investment before the end of the year or something like that, and then some of the rest of it in fiscal 25. I think it surprised the market. I don't think it would be out of line to say that the market was surprised at this is the first time I've been following the sector for almost 30 years. I can't think of an example where a bank made a meaningful capital allocation of a foreign entity that didn't have a strategic like there was no control. It was completely passive.
Right.
So it's interesting. I think my initial I was puzzled, but I'm not sure this isn't the worst thing in the world, that they are going to get some exposure. They are going to accomplish their goal of getting more capital allocated outside of some of these emerging markets that they're trying to de-emphasize. And, buying KeyCorp or the stake in KeyCorp, listen, in 5 years, for sure, KeyCorp is going to have a higher stock price than it is right now. And I don't know about the issue of optionality or whether or not they end up trying to buy the rest of it. And if the market gets a sense of that in, say, year 3, then, Bank of Nova Scotia will go to, is currently at a discount and will stay there.